Let's speak to Colin. Colin, we just heard there the Bank of England leaving its rate unchanged as expected, and also leaving that QE program at 175 billion, but saying that that is under review. What's your reaction?
Well, it's not a great surprise. The markets had expected the bank to hold fire this month. And if you think about the news on the month, it's hard to see much that would have changed any of the committee members' minds. What will be really interesting is in the minutes whether you continue to see that 6-3 vote split, or if instead the committee have kind of signed up to wait until November, when they'll get the new quarterly money data, they'll have a new set of forecasts, and then take a decision then.
Okay, so possibly something in November. Okay, thanks. Jeff, I want to ask you about your reaction there. We saw the pound moving higher after this decision. What are the factors backing up pound strength at the moment in general?
Just now, straight after the announcement, that would be more of a knee-jerk reaction to no further QE. I suspect that will start to come off again this afternoon, so more of a very short-term horizon. Medium term, though, it's pretty clear the UK economy is still in trouble. Our view at UBS is that the bank will do another 25 billion of QE and that they'll announce that in November. As Colin was mentioning, clearly what the minutes say when we get those in a couple of weeks will be key to sort of gauge how likely in November or even in October a move for further QE is likely. So for me, sterling medium term still down. Today a bit more choppy around the announcement.
Okay, well, let's talk about the economy. I mean, we had the National Institute for Economic and Social Research saying that the UK ended recession in May. It's returned to growth in the third quarter. We've certainly seen a lot of positive economic data. Is that enough to convince you that we're pulling out of recession?
I think it is. Well, obviously it's good news that we're out of recession just now. Unfortunately for people in the UK, I suspect what it really means, though, is that we're going to go into a period of very sluggish growth. And in the global economy, we're probably seeing that as well, but particularly in the UK, and really what we need is sterling to remain relatively low, particularly against the euro, as it has done, and that to start assisting exporters and manufacturing. And then down the track, hopefully the banks also start picking up and that starts to feed through as well. But unfortunately, out of recession, but not really out of trouble just yet.
Okay. Colin, you nodded your head. Do you think we're headed towards a period of stagnation?
Perhaps not quite stagnation. You might see some small positive growth numbers over the next year or so. But I'd agree that sterling, has recently been showing some signs of life, and that could limit the boost to exports which would support the economy. It has to be said, we don't think the UK is suddenly going to turn into an export-led economy and start posting trade surpluses. What's likely to drag the economy out of recession over the longer term is when consumers are happy with the level of debt they've got, when they're through that retrenchment process and they're willing to start spending again.
You just hit on an important point, and we've got very high levels of consumer debt in the UK. Jeff, I want to ask you about these weaknesses in the economy. I mean, why not just, if they're going to expand QE in November, why not just do it now? Why not just get it out there?
Well, really, on a global scale, QE is an unknown. We've only had one real data point before the last 12 months or so, and that was Japan. There were some problems, etc. The bank want to tread a fine line between doing enough and not setting off inflation down the track. And really that treading of that fine line in the QE space is quite difficult because globally there are very few examples of where that's been done.
And we were talking earlier about the fact that they may expand this QE program. Do you still think they might do it in November?
I think November is still extremely likely, actually. We know last meeting 3 voted for it. This meeting, it's quite likely we had another 3 as well. We'll find out in a couple of weeks from now. We know that Adam Posen, who joined the MPC today, is structurally relatively bearish, so he was likely to have sided with King today. And so that means that assuming that money growth doesn't pick up between now and November, which is what the bank's targeting, it's quite likely they'll do another 25 at that meeting.
Okay, and I mean, you're an expert on the pound. What are your predictions for the pound, and how is the progress that we've seen in the UK economy playing into that? I mean, we've seen it strengthen quite a bit.
Structurally, I'm still quite bearish on the pound, unfortunately. I suspect euro sterling needs to push up, perhaps back above 90 at some stage soon. And sterling versus the dollar, there are some other things starting to come through just now which suggest the dollar may do okay over a medium-term horizon. Equities are starting to top out just here. We've seen equity futures off back below 1030 for the S&P just now. Gold has come off sharply this morning as well. So those sort of factors are saying to me the global economy is improving, but people perhaps are getting slightly too optimistic. That will help the dollar and would also be negative for the pound.
Okay, and we also expect a less robust recovery here in the UK than we do in other parts of the world, in the US, for example.
Absolutely. I mean, it's always a relative story for currencies, and it's also relative to expectations as well. People are reasonably upbeat on the UK now compared to where they were, especially 6 months ago. And perhaps that's slightly too optimistic. We should see positive growth Q3, Q4, but beyond that, it's probably going to be quite sluggish.
Thank you very much. Jeff Kendrick there from UBS.